An empire in ruin. I'm your host, Steve Metre, and thanks for joining me today. And I want you to understand what's really going on in China as we get into today's story. And to do that, we have to go back a little bit to China's COVID-0 policy. So President Xi Jinping said he wanted to stamp out this infection and effectively had to shut down their entire economy and bring it to a level of just minimal operation. Now, economically, this led to inflation out to the rest of the world because, of course, China being the world's largest exporter, when you bring your production down to minimal levels, you slow down your factory production, your transportation sector is just running at minimal levels. All of that's going to lead to inflation to the rest of the world. And that was okay because they wanted to stamp down the infections. That was their objective. But internally, it had other problems. Consumption outright collapsed in the country. And this is a real problem because internally, they need consumption. Financially, you look at this from a monetary perspective, what has happened is their dollar reserves have been drained at a rapid rate. So things weren't looking good. And then the housing sector, right? We saw what happened there. When your economy is shut down, you can't build homes. People that were paying for them decide, hey, we don't want to pay for these anymore. And that led to nearly a crisis in the real estate sector. But of course, we knew, as expected, the government would step in at the last minute and offer some bailouts. But it didn't stop there. Then the revolution started to build. People started to get upset. And we talked about on this show that President Xi Jinping had two choices: either crush the uprising and risk being overthrown, or capitulate and reopen the economy. And so he did that, and now this happened. China estimates COVID surge is infecting 37 million people a day, and this is going to have major impact on their economy in a way we haven't seen yet. As many as 248 million people, or nearly 18% of the population, likely contracted the virus in the first 20 days of December, according to an internal meeting from China's National Health Commission. If accurate, of course, that being the question, the infection rate would dwarf the previous daily record of about 4 million set in January 2022. So you think, looking from this from an economic standpoint, if they were having trouble running their factories when people were on their COVID-0 policy, well, how are they going to run their factories when people are home sick? Are people going to want to travel to China? Not likely. Are people that need to check on their factories want to go there? Are people that are running their factories there or have factories there that are desperate for production? Well, that's going to drop. You're going to see the transportation sector get hit. Can you imagine if a ship coming out of China docks at a local port, what people are going to think about that? So I want you to think bigger about what's going on here. Isn't just the fact that the infection is having a major outbreak, it's how this transmits now into their economy and to the rest of the world. Beijing's swift dismantling of COVID-0 restrictions had led to the unfettered spread of the highly contagious Omicron variants in a population with low levels of natural immunity. More than half the residents of Zhejiang province in China's southwest and the capital Beijing have been infected, according to their estimates. Of course, the estimates, the question is, are they accurate? And then the next question is, how fast does this spread to the rest of the country, and where does it stop? Do we have another global outbreak? Does a country get shut off from the rest of the world? But again, we think about the world's second largest manufacturing base, but no, the largest manufacturing base. And you see so many American companies have their factories, their products produced there. And now all of a sudden, this is going to change the entire game. Because remember, people in China have been stuck at home anyways. They couldn't consume. Now they're sick. What does this mean to their jobs, their livelihood, potentially even the government in China when people get fed up with what's going on there? How the Chinese health regulator came up with this estimate is unclear, putting some question perhaps to these numbers as the country shut down its once ubiquitous network of PCR testing booths earlier this month. Precise infection rates have been difficult to establish in other countries during the pandemic, as hard to get laboratory tests were supplanted by home testing with the results that weren't centrally collected. So perhaps maybe these numbers, aren't really true. We'll get into some evidence that perhaps suggests they are more than true. But why do we look at this from an economic impact in China? Because they were in a desperate situation. So President Xi Jinping, seeing that this revolution was starting to begin, he quashed it down, backed off, gave the people what they wanted, and was starting to inject liquidity into the economy. And we're getting signs, and this is good news, because China is now in a position to actually pull the rest of the world out of what was this slowing down pace from aggressive central bank tightening. And we can see that in this chart here from Cross-Border Capital, showing global liquidity and world wealth. And what we can see is global liquidity in orange was near bottoming and looking, thanks to China, to head higher, which is great news. Now, from a financial standpoint in China, the reason they needed to do this is because they need to get dollars. And that is a real key point, because they're driving down their dollar reserves. Now, for China and other countries like China, they need trade to get dollars. And here we can see in the US data that they're draining their reserves at a rapid rate. And here we can see major foreign holders of Treasury securities. This is how countries hold their dollar reserves, by buying U.S. Treasury securities. Going back a year ago, China held $1.065 trillion in dollar reserves in Treasuries, now down to $909 billion, and likely we expect that number to continue to fall. So you think about, in a dollar reserve system, that means you want Treasury securities, you want to accumulate them. That is like being in a gold-based system and accumulating gold. So if your gold reserves are falling, you've got a problem. Well, in a dollar-based system, if your Treasury reserves are falling, you've got a problem. And that means you need to get your country reopened, you need to get commerce happening, your factories humming, and you need to get global trade. But all of a sudden now, that data points to the fact that things there may be pretty severe. As China reopening rally fades, as COVID wave empties the streets. What's not been fully priced in is China's economic recovery next year after reopening, because the path is not certain. Investors are waiting for various data to see whether consumption can come back. And so what happened is you saw this front running, in the stock market there, as people got bullish about, hey, there's going to be a reopening. There's this liquidity injections going on. We see the banks are being pushed to lend. That means the real estate sector is going to get restarted. We know people have been stuck at home. They've got some savings. They're going to want to go consume. And this should be bullish. But now you're starting to see, from the data side, from the economic side, that perhaps the economy in China may turn to the downside. Of course, when you think about this from an investment perspective, perhaps people were front running this. And what we see in our CTA-Timer report today is that indeed the machines were front running this too. We can see historically, if we look at FXI, the China large cap ETF, they're 100% long based on a historical model, suggesting that if indeed there are problems in China's economy and it turns down, well, there could be an opportunity for investors on the short side. There could be people that were looking to get in there that say, maybe I don't want to buy in at an extreme position, wait for a pullback and wait for some of this to filter out. But for a limited time, $20 a month, a link in the description, but give you an idea of how that report helps you see what's going on here when you pair it with the data, because now we find out again that perhaps the government is right and this thing is running out of control. As China's streets more deserted than during lockdowns, data shows a measure of congestion levels across 15 major cities is 45% below January 2021. The only other time it's been lower this year was in early February, when the Lunar New Year period saw factories wind down, restaurants close, and people leave big metropolises to return home. So now you're seeing the country may just kind of self-shut down And that, of course, again, you think about this massive economy, this massive country, and all of a sudden they were shut down on purpose by the government, and now they're being shut down because, well, people are sick. They just can't go to work. Disruption in traffic is even greater than during the periods of the lockdown. Again, a sign that this is indeed worse, a measure that has now been scrapped by officials as part of their COVID policy pivot, such as Shanghai's 2-month shutdown across April and May, and a raft of similar curbs in cities around the country in October and November. China is grappling with its biggest ever COVID outbreak, which threatens to disrupt, here we go, activity across its economic powerhouses as workers fall ill and many people isolated at home. So here again, you come back to this factories. You can't get people work because they're sick. You have people then across all kinds of industries. Even if they could go to the factory and work, what about the people that are moving goods through the country to the ports? What about the people at the ports? What about those ships as they show up elsewhere? Are other people in other countries going to want to interact with them? Do they even want their ships to dock there? So you start to think of how this is having major issues in their economy, and then you think about American corporations that have factories there, and maybe now thinking, hey, I got to pull these things out of there even faster. That's going to be a hit to their earnings as they look to move production elsewhere. This could lead to a collapse of the empire. While Beijing was first to be hit by a surge of infections straining hospitals and flooding funeral parlors, similar scenes are now playing out in Shanghai, where pharmacies are selling out of medicines and businesses are shutting on a shortage of staff. And now we see China's soaring COVID cases push economic activity off a cliff. As I've suggested now, activity at factories is probably plunging in December. Of course, we'll get that data in January. According to the Emerging Industries Purchasing Managers Index, which is a leading indicator for the official and cakes and manufacturing PMIs. The EPMI, based on a survey of companies in the area such as green technology and new energy vehicles, plummeted to 46.8 this month, the lowest level since April and below the 50-point threshold for contraction. Sub-gauges for purchases, employment, and business expectations plunged the most, and this is the beginning of how this outbreak is spreading. We know that's going to be worse, and that's why we look at their stock market and say perhaps this big move that got front run is going to get reversed in a big way. Policymakers and economists are counting on consumers to be a major driver of any economic rebound after infections slow down next year. So they hope. People piled up savings in 2022 due to COVID disruptions and the property crisis, and getting them spending again will be key for an economy suffering from low business confidence, declining external demand, and persistent housing downturn. The question isn't that people will want to spend. The question is, will businesses be able to survive? And that's what we saw here in the U.S. If it wasn't for some of our pandemic relief efforts, a lot of businesses would have failed, and some are coming back to the brink of failure as demand slows down. So you wonder in China now, will a lot of these local businesses be able to hold out long enough for this thing to wear itself out? An initial boost to consumer confidence from the shift away from COVID zero has already faded, with consumer sentiment trending lower following a rebound earlier this month. China is facing serious health and economic risks in the near term, as many would-be consumers likely stay home and forego certain activities to avoid exposure to the virus. Puts into question, will the real estate industry come back to a collapse? Will companies run out of there as quick as possible? Will China even just implode on itself because it can't get things under control? These are questions we're going to be following and trying to answer, but right now it looks like we could be seeing the end of an empire. I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.